introduce Professor Stefan Brunnhuber, who has an incredibly diverse CV, a very multidisciplinary person with PhDs in medicine and socioeconomics, a medical director and chief medical officer, senator of the European Academy of Science and Arts, endowed professor for psychology and sustainability. And I invite Stefan to share his vision with us.
So this last session is going to be a little bit different than the sessions before. We have to boil it down to very practical stuff. I'm a member of several working groups of international think tanks, and we are trying since 2 years to answer one single question. How can we finance our future? And can blockchain technology help us doing this? Can we come up with a completely different view on how to finance our future? We agreed on the 15th of September 2015 in New York. I'm speaking about 20-25 minutes, and I'm going to address issues you probably have not heard yet, in order to trigger a discussion about our common future. In order to do so, let me just do some preliminary statements. The first thing is, when we're talking about the SDGs, and we've been doing this the whole day, we are roughly talking about a $5 trillion US bill every year, plus minus. Okay, we're talking about the trillions, not the billions. Okay? Anything else is a different discussion. Second, when we're talking about the financial system through which we want to channel and orchestrate or invest SDGs, we're talking about a very unstable system. We're talking about 124 banking crises, 320 currency crises, and over 64 sovereign debt crises over the last 30 years, which makes about 10 events a year. Just take in mind that if you are driving a car yourself, which breaks down 10 times a year, what would you think? Would you think there's something wrong with you driving the car, or is there something wrong with the design of the car? And this system is very resistant to change. It has, economically speaking, a lot of so-called multiple lock-in effects. 95% of all our goods and services are depending on fossil energy. We have double-digit trillions assets under management. We have long-term investments and dependencies, which basically locks in our pathway. And if we take empirical figures seriously and continue the way we've been doing it so far, like business as usual, or like wait and see, it will take us roughly 3 generations, roughly a century, to equal gender, access everybody to education, overcome poverty, or having humans accessing healthcare in general. So when we talk about SDGs, I would like to emphasize that we're talking about a program we're not only committed to, but we're only about a third of the SDGs have a private property. 2/3 are not. 2/3 are about global public goods, roughly. And if you look into data and if you look into science, we would like to show you that the return on investment on global public goods is between 1 to 10 to 1 to 50 to 1 to 100, which is roughly 10 to 100 times higher than any private commitment on this planet. So what's required in order to finance our future is high liquidity, full speed, in a completely different way than we're used to think. And this is what I would like to discuss with you. I was asked by the organizer to make it very simple and easy. And I'm now going to show you a couple of slides where I'm breaking down this relatively complex topic into some simple slides. And the first slides I want to show you is this one here. This arrow simply demonstrates the global value chain, starting from the central banks to the commercial banking system to the services and goods. And on the other side, you see the shadow banking and the shadow market and the rest. And through this, the world community is generating roughly 80 trillion, roughly, US dollars a year. We all together. The rationale of financing our future from a traditional and conventional perspective is we redistribute money along this value chain through fees, through taxation, to philanthropy, private crowding in, and this is called an end of pipe finance. So we create something along a value chain. At the end of that value chain, we redistribute the money on one way or another. And what you see here that in OECD countries about every third of a dollar is in fact redistributed. But if it comes to SDGs, less than 0.7% of our GDP is redistributed. Just consider, even the 0.7% of GDP is roughly 10 times too small to finance our future. Can we do that differently? Can we look at all these things about financing our future in a different way? Can we use a different technology to do so? This is the topic of this session. Just imagine. What is the rationale behind the blockchain technology? Blockchain technology can offer to change the game. We're not talking about redistributing money anymore. The amount of money redistributed is far too low, far too slow in scale and speed. We are producing additional, parallel, optional, regulated liquidity in a digital form in order to finance SDGs. We have now the technology available to do so. With blockchain technology, we increase the social capital in each market because trust and transparency is increased. There's almost no tax evasion, fraud, illicit transactions, or corruption because blockchain technology ensures that each transaction is visible. Within the right algorithm, it's especially obelisk algorithms and a Skyledger technology, we can ensure a smart contract that the money is spent and insured on investments and consumption patterns which are associated to SDGs. And suddenly the additional digital liquidity is used to make each sector and each region more resilient. And we end up having a bike with two wheels. We end up with an economic situation which is frankly Pareto superior. Because with each transaction, we're decreasing negative externalities. With each transaction, we're increasing the jobs in the region. We're increasing green tax and green growth. And we're stabilizing what economists say the CPI, which is the consumer price index. This is the full picture, just as a take-home message. Assuming we're living in a world where we have the conventional monetary system and we have an additional parallel currency system, digital, blockchain associated, we produce ongoing positive externalities for the economy, for the future, for peace, and for the environment. With this mechanism, or with a very similar mechanism to this, it's a bold statement, but I think UN is ready for bold statements. With this, or very similar mechanism to this, we can end poverty and hunger in less than 18 months. And I would like to repeat that sentence. With this, or a very similar mechanism to this, blockchain-associated parallel digital currency, we can end in the region of interest hunger and poverty in less than 18 months. This is a graph you don't know. No, you don't know. It's been done by my working group. It just looks like the SDGs. But it's not the SDGs. It's the Sustainability Development Solutions. And throughout this conference, and throughout most conferences on sustainability during the last decades, we've been discussing governmental issues, technology, geoengineering, renewables and sinks, the impact of science and finance, corporate world, the changes in the culture, demographic policy, NGOs, changes in lifestyle, social impact and digitization. They're all extremely important. But throughout the last decades, there's been one player who has been chronically missed in almost all discussions on sustainability. It's the impact of the monetary regulator on our common future. Let me summarize. The question I was asked by the organizer is, how can blockchain technology help us financing SDGs? If we do it in the right way, producing a parallel, additional, regulated and targeted liquidity of roughly, our estimates is roughly $1 trillion a year. It's a little bit more, but we can discuss the details at the reception. We do this through a third-generation blockchain mechanism. It's a sky ledger. Basically, there's no mining costs, no transaction costs, and we can create up to 200,000, 300,000 ICOs per hour. If this is done in the right way, we do not have to rely on corporate social responsibility. We don't have to rely on charity. We don't have to rely on ethical approvals and commitments, resolutions, and moral imperatives. We have a psychological and a monetary mechanism in place which ensures 724 for 8 billion people, shifting and transforming towards a common future. And when there's change, there's people who build walls, as the Chinese proverbs say, and others build windmills. representing a couple of international think tanks, I would like to build a windmill with the UN for a common future. Thank you very much. We did not, prior to this conference, talk to each other. I actually was only sending out my stuff about 2 weeks ago through the organizer to all the others, and I didn't know how they would respond and what they would do. It's the first time we met, and it's really nice to identify the synchronicities between the different levels we're merging towards the same goal. Thank you very much.
I'd also like to thank all the speakers for keeping very good time and keeping in mind this is the last session. I think that's very nice. However, we still have a very few minutes left for a quick question or two. We also need to give word to JIU.
Yes, thank you, Diane. Actually, my purpose of inviting 1, 2, 3, 4 discussants was to challenge Professor Brunnhuber, and no one actually challenged him. So that is because probably they are experts and they know what they are talking about. But as an amateur, I can challenge Professor. Professor, I read in the newspaper that the cost in energy consumption of the transactions on this technology is very high. Isn't that a sort of impeachment to the glorious future you are predicting?
Thank you very much. Thank you very much for this question. I was prepared to answer that question. This is the messages you're referring to is referred to first generation blockchain. When we're talking about third generation blockchain, we're talking about Skyledger distribution technology. There's no mining costs, there's no transaction costs, and there's no work of proof or work of stake algorithm. It's basically a web of trust algorithm. It's different, and it does not require additional power than any other internet use. Okay? This specific question you're addressing, which is very important because otherwise you have a downside of the whole thing. It's been technically basically sold, and we do have already a so-called minimal viable product, an MVP, that it shows that it works. It works and it's running already. It's not been scaled up, but it's working. Thank you very much.
A number of hands here, but the gentleman on my left was first.
Antonio Houtle again from Global Compact. Stefan, it's fascinating, and it's also, can you give us some indications where we can find first more of this information? Because I think it's very important to know that. Then as an economist, I have still a question, because we need to create wealth, and development is not about money. Development is much more. It's about an environment which is enabling development, good governance, etc. So for me, there are lots of question marks in it. As fascinating it's sounding, do you have some indications in which direction it goes?
I do. First, I'm going to send you some stuff. I'm hearing from your voice that you have a Swiss background. In Switzerland, there is a 75-year history of a parallel currency running in this country successfully, showing that it operates anti-cyclical to the Swiss economy since 1950. It's called WIR, W-I-R. It produces, it's anti-cyclical, and it proves empirically that it creates jobs in case the Swiss economy is on decline. It doesn't solve all problems, yes, but it shows one thing. A parallel currency is like riding a bike with two wheels. This is the contribution a digital currency can offer. It's not solving all problems, absolutely right, but it enables that we can solve all the problems we agreed on in September 2015 on the 17 SDGs.
Sarah?
I'm Sarah Cummings from the Knowledge for Development Partnership, and I'm really, really new to blockchain. And I'm aware that I may just be about to say the most stupid thing I've ever said in public. But when I hear this, it makes me think of social capital. That, you know, this is something you can't really monetize, that it's totally off the grid, nobody controls it, but we all have access to it. I'm so relieved to see you nodding your head.
Just to give a short answer, it's not about tokenization of social capital, but the social capital in the region where this kind of mechanism is in place is indirectly increasing. Because about 30% of UN funds are lost due to fraud, corruption, illicit transaction, mispricing, etc. This is over. This game is over. People can trust in the mechanism, they can trust in the technology, and they can trust in every step they're doing along this transformation belt. Okay? It's not about monetizing social capital, but social capital in that region will increase indirectly, basically automatically, by every user. Mm-hmm.
Latvia, please.
Thank you very much. And I would like to start by thanking panelists for their presentations. I must say that I am on the learning curve in this debate, and I would like probably make few skeptical comments and ask questions. So first of all, I think that one of the problems at the moment of the blockchain technology in general is that very few people understand it. And as not many understand it, there is no upscale and or a scaling up of use of that technology. And one of the tasks would be to make it easier to understand for dummies. Let's say if you would point to the material somewhere, blockchains for dummies, I would be first to read it. Secondly, I think it is illusion to speak about free services because every activity has a price. The question is who is paying the price. So as a result, all these debates about free internet and all stuff is basically illusion. We are paying simply with other things. The same applies for blockchain. Thirdly, the trust. Trust is very sort of subjective, and we trust by default until the moment we burn our fingers. And the moment we burn our fingers, we become very cautious. And this is the issue of trust. It probably is exaggerated in all the debates. Every system can be gamed, including blockchain. I do not know how, but certainly I'm sure that it can be done. There was another point that I want to make, and I forgot about it.
Maybe I can
so the question is what we will do with those 4 billion people in the world who are not yet online and probably won't be in the near future for different reasons. So whether we will, if we're speaking about nobody leaving behind or no one leaving behind. So actually by introducing technology and accelerating development for those 3.5 billion who are online, we're by default putting 4 billion behind. Thank you.
Okay. Very short answer. I'm driving a car. I don't know how this car works, but I'm driving that car, and I rely on technicians to build that car and to repair that car. The same is true for any other technology. With regard to trust, you're absolutely right. You can misuse every system on the planet. The question is just business as usual. Wait and see. Like, well, let's wait and see what's going to happen. The costs involved in these scenarios are empirically far higher than trying out something else. The so-called opportunity costs, the costs for damage control, are increasing exponentially the next years. So, of course, every system can be misused. You're absolutely right. However, this system is much less eligible to be misused. When we're talking about misuse of the system, you should invite me to Lithuania and then we can talk about the misuse of the current system on mispricing, on shadow market, shadow banking, and all that stuff, okay? This is where the real misuse is happening. But you're right, theoretically, you can misuse the system. And third question, with regard to leaving millions and millions behind who do not have access to internet, this is indeed a question we have to answer and address. You're absolutely right. I do not have an answer to that question at that moment. Yeah.
Maybe to the last point, not every single person actually needs to have full connectivity all the time. We also, like what I was showing, like the first pilot we did in a remote area of Pakistan with 100 people, we also as a backup took a satellite internet system with us because we weren't sure whether just a mobile network would be sufficient, but it was fine, it actually worked. And I think what we're seeing more and more is that the number of people who have access to the internet is increasing. Right now, every second person on the planet already has access to regular internet, and we're seeing this in even a lot of displacement settings and also in a lot of developing countries, that the rate of people is increasing dramatically. And I think when you don't think about that every single person immediately has to have access, but maybe just the shop or maybe just a point that the access is a kind of a hub and spoke network, then soon you get to a point, and very easily actually, that you need to have basic coverage of internet. Yes, I agree, but you can actually fast track a lot of those developments. Maybe not in the most rural, most remote areas immediately, but it's if you look at the development, how it actually has increased, that every second person right now individually has access, I'm very positive that we will see that development over the next couple of years dramatically increasing.
Please.
Fascinated by the blockchain, which I am discovering right now. Thank you for the excellent case you are making. It seems like quite a successful technology with the people, because whenever all the cases show that has been a great success when there is many people involved in various problems and issues. My concern is the role of governments, and a very precise question. What sort of resistance you meet when you are trying to address this issue with government officials? And because it has a bit of regulation, it has a bit of risk, it has a bit of access, all sorts of issues can be raised. Thank you.
This is one of the most important questions to address. How is government responding? And here especially monetary regulators, financial ministries, and financial officers, because this is the gap of discussion we're missing. Okay, we're not talking about the technology, it's there, it's going to be developed the next months and years, and it's not about the empirical evidence, what it's doing on a behavioral level. Because if you live in this world of a blockchain-associated SDGs and can pay your taxes with it, etc., you create a transformative mechanism 724. Every dollar you spend within that system is creating good. Okay? It is psychology. I tell you, it's not the first time I'm discussing that with monetary regulators. It's psychology. We are trapped in the idea that whatever we're doing in business, whatever we're doing in economics, has to run through a monetary single monoculture, where at the end of that chain, we're redistributing money to something else. The psychology. And if you take it even on a medical level, it's about the left and the right brain in your head. If we only think linear, sequential, silo, we end up with an end-of-pipe technology. If we start thinking intuitive, parallel, both parts of the brain are active, and each human being has access to both parts of the brain. Thank you.
I would like to thank all the speakers. I'm very happy with this session of the Dream Team because nobody thought that technology is going to solve our problems, but we got a number of good ideas how technology can be a vehicle for solutions, and we have an inspiring vision which is actually a macroeconomic proposal using this vehicle and many other useful examples. So thank you very much. Thank you to all the speakers and to all the participants, and I invite you to continue this discussion during the reception.